What's up, everybody? It's Thursday, March 4th. Woo! Rocky day in the market. The market was down. And I'm going to talk about that. Some people saying, wow, Mike, it's a good thing that I sold a week ago or I sold 2 weeks ago. I could say, hey, it's a good thing that I sold in August 1987. It's a good thing I sold in December 1999. It's a good thing I sold in August 2007. It's a good thing I sold in March 2020. See where I'm going with that? I mean, it just doesn't pay. And if you're going to tell us where you sold, you got to also tell us when you get back in. I mean, this in and out, this jumping in and out in a growth environment, you know, it's a good thing I sold in December 2018. I mean, come on, people. When are you going to get it? I mean, you're in a growth environment. All policy. You know? I mean, fiscal expansion. Low interest rates. I mean, when are you going to get it? So you sold. Hey, give yourself a pat on the back. Now let us know, when you get back in. And if you think, you could jump in and out like that, I mean, come on. All right, let's talk about the market here. I'm going to say this. My only regret is I don't have unlimited capital to deploy. I mean, we went from a situation where stocks were expensive to stocks, and I'm talking about really good name stocks. You look at the tech sector, right? You look at Apple, you look at Microsoft, you look at Facebook, you look at Amazon, you look at Google, you look at Tesla, right? I mean, all these stocks have come down in price. And I've said it so many times, consumers are really savvy in this country. I mean, they don't buy unless things are on sale. But in the stock market, when it comes to investing, I mean, the behavior is 180 degrees opposite. It's really incredible when you think about it. I mean, prices go down, and what do? They sell, they panic. Prices go up. And what do? They can't get enough of it. I mean, it gets expensive. They buy it. When it goes down, they don't want it. It's hard for me to fathom, the disconnect between the two types of behavior. On the one hand, consumers are so savvy. I mean, it's incredible. I mean, the consumer in America has literally taught corporations, taught businesses how to construct their business models. They have to offer discounts. They have to have their products and services available at low cost, or people are not going to buy it. Even, fancy things. When they go on sale, people want them. All right? That's consumers. But investors, it's just the exact opposite. I mean, it's crazy. So my only regret is I don't have unlimited capital to deploy. I bought some today in Forex. I'm selling into the dollar rally. Yes, I know. And everybody's going to be like, the dollar is, King Dollar is back. And we're going to hear all that stuff again like we did. All right, fine. There is one thing that is going on here which is real. And I've talked about it many times, and that is the rise in bank reserves. And again, if you've been following me any length of time, I've been explaining this to you for 2 years about the supplemental leverage ratio. Now it's out there. Everybody's talking about the leverage ratio. Suddenly everybody is an expert on it. Like 2 years ago, I was telling you people, look, when reserves come in, and all these quacks, all these goofballs, to them it's print money, right? And that was going to lead to a big boom in risk assets. And I said, nah, it doesn't work that way. You get these massive reserve dumps onto bank balance sheets, and they have to adjust. They either have to raise capital, or they have to slow down loan growth, or they have to actually liquidate assets. And we saw them liquidating treasuries, and that is contributing to the rise in bond yields. And the bond yield thing is unnerving the market. Let me also say today, again, it's a bunch of headline trading. You had Powell speaking today and everyone went nuts. That's another thing I've spoken about here so many times. This headline, this penchant for headline trading and how that is just dumb. All right? I mean, go back. Go back. How many times have I talked about it with the trade war BS and with all the other crap? And I went, every time that happens, I go against these people. I mean, how many times do you have to see it in action before you understand that it's a gift? So they did it again today. But there is something that, I'm keeping my eye on, and that's with the leverage ratio and reserves in the banking system. And, I was telling you guys about that already 2 years ago, that it's a problem when they dump all these reserves onto the bank balance sheet. Now, everybody's talking about the leverage ratio. Everybody's an expert on the leverage ratio, but I was the one who first, explained it to you. So, what's going to happen? The question is, at the end of this month, when the exemption expires, what are they going to do? Now, you would think that they would extend it or make it a permanent exemption, but there's politics involved. You got Senator Elizabeth Warren saying that the banks shouldn't have any exemption. So we'll see what happens. The banks will get through it, but it's going to be a rocky period. Treasury still plans on spending out a lot of money from its account at the Fed, and that's all going to go into reserves. And reserves now at a record of around 3.56 trillion. It was up 180 billion in the latest week. Now, we didn't see any impact on loan growth. As a matter of fact, loans increased by the biggest amount in 10 months in the latest data, but that only covers the period like a week and a half ago. We'll have to see. So short term, you might still have some pressure, upward pressure on bond yields, but we'll get through it. The market has gone from being overpriced to a lot of these stocks being really attractively priced. And again, my only regret is I don't have unlimited capital to deploy right here. If I did, man, I'd just be buying every single day. I mean, you got all these good stocks: Apple, Microsoft, Facebook, Google, Tesla. How about Tesla? I was the one. I said 725 to 750, Tesla was fully valued. I had people laughing at me. I had one dude just condescendingly quitting my service and sending me a stupid email saying it's going to over 1,000, it's going to rocket, and he didn't need my service. Well, where is it now? It's at 600. Where's the 1,000, buddy? Where's your $1,000? On the other hand, if Tesla gets, down here even or in the 500s, that is a super bargain. It's a growth stock. It just is now fully valued, I think, for the next couple of years in terms of what the projections are. But it doesn't mean you can't make money on that stock. You buy when it goes down, you sell when it goes up. And if you're going to say something to me like, hey, I'm so happy I sold out last week or 2 weeks ago, then tell me when you get back in. I want to know. All right? I want to know. Because you look like a hero. Nobody knows what you did. Then you came out and you said, oh, I sold. Okay, good for you. I say everything that I do. I'm buying this dip. All right, everybody. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.